Alright, welcome back to Robinhood Stock Market Watch List. My name's Carlos, and today is Sunday, September 18th. This is our weekly meeting that we do regularly every week. That way we can prepare ourselves for what's to come. That way we are aware of what's going to happen before it happens. That is ultimately one of our number one rules. That way we don't always go into a week or a day not knowing what's going to happen. So we'll go over some really critical events that will have a big impact on the stock market. And this is a live session, so anyone in the session that wants to contribute, add to it, feel free. But this is a recorded session, so it will be uploaded to our YouTube channel here as soon as we're done. So one of the important things that we like to go over that has a significant impact on the stock market is economic reports. And one of the best ways to find economic reports information is through an app and a website called investing.com. If you're on the website, there's an economic calendar that you can click on, or if you're on the application, it should be a little calendar icon on the bottom towards the middle area. When we click on the calendar or the economic section, you may see a lot of gibberish, but we need to filter everything. We need to make sure we can kind of configure it so we can understand it a little better. So click on filters. If you're on the application, it'll be a little funnel icon. We want to clear everything, so just click on clear. There's only two things we need to put a check mark under, and that's the United States. And under importance, you'll notice a 1 star, 3 stars, or a 2 stars and a 3 stars. We want to put a check mark under 3 stars because what we're telling the system is to pull everything that'll have the biggest impact on the United States stock market. Once you have those two on there, click apply. It'll then refresh. Then we need to see what is coming up ahead for this week. And so it's a very busy week, and this week has a lot of federal meetings, and this is the week where we're anticipating an interest rate hike. Yeah, we need this week here. This week, yeah, just always verify the dates. So yeah, Fed meetings, interest rate hike, and now we have a forecast. They just posted on there yesterday evening, and so this is basically telling us that we're forecast to receive a 0.75% interest rate hike, which at a certain point, it can be bullish, but sometimes too much is bad, and so there always needs to be a balance in between these rates and inflation and everything, where it can stay positive. But once it gets over a certain point, then it starts providing bearish characteristics. So we'll start from the top. We'll notice there's no Monday. So Monday is kind of to be determined. It really depends on what kind of news came from the weekend. So far, there's not a whole lot of news that I think may provide a lot of bullish or bearish characteristics. There's not a whole lot of news on the railroad strike. There's a lot of rumors that it hasn't been resolved, but there's a lot of news that it has, or at least maybe they're buying time. There's been some news. But it all just seems manipulation news. Nothing really seems to be solid. They could be talking about China, Russia, Taiwan, and everything. Nothing's solid. So Monday seems like it may be a great recovery day, recovering from last Friday and Thursday's bearish characteristics, because the stock market needs to come up before it starts coming down. So Monday would be a great opportunity to start pumping the market up as much as we can, because the rest of the week looks very, very bearish, and I'll show you why. So Tuesday morning, and when we're looking at the time on these, it's very important that we know what time that it will be in your time zone. When we're looking at on the website, it's going to default to the Eastern time. So depending on where your time zone is, you may need to do a little calculation. But if you're looking at it on the app, it'll automatically adjust the time for your time zone. And so we'll just base this off of the Eastern time. So the stock market opens up at 9:30 in the morning. This report comes out 1 hour before the stock market opens. So this is telling us it's going to affect the stock market during pre-market. That's a lot of great volatility. And so this is the building permits for the month of August. Now, the more rare that the report is, the more volatile that it'll provide the stock market. Meaning, or if it's a weekly report, it'll have a very mild effect, or if it's a monthly report, it'll have a pretty strong effect, and if it's a quarterly report, it'll have a pretty massive effect, as well as a yearly report, because they're just more rare. And so a monthly report, that's good. That will help add a tremendous amount of volatility that we need for our option plays. Now, also keep in mind that we're still going through the quantitative tightening for quite some time. It's going to be very aggressive for the next several months, and then it'll start to kind of slow down a little bit. But for now, we have that Tuesday and Thursday pattern. So the other thing with this Tuesday economic report, the building permits, is that there's always going to be a forecast and a previous report displayed here. When the time comes, the actual report will typically display there instantly. Sometimes there may be a delay, but usually it's always instantly. And the neat thing about this is that the news companies and the media is receiving the same information that it's released, the same time that we are. And that's why we don't always want to rely on news apps and news companies for the information, because they're getting it from sources like this, sources that we can get it just as well. So, but it gives us an advantage because we can receive and react to it as quickly as possible. And that way, when a news company gets it, it takes them time to process an article and then to blast it out. It could be minutes later or 5 minutes or an hour later. And so it's always important to know what's going to happen before it happens. And that way we're ready for when it does happen. That way we can react to it. So, for example, the forecast here shows at 1.61 million, where the previous report was 1.68 million. This is a report where we need the numbers higher. If you're not sure what the reports are or what they mean, feel free to click on it. It'll easily tell you very brief paragraph right here that the building permits measures the change in the number of new building permits issued by the government. Building permits are a key indicator of a demand in the housing market. Now, a higher than expected reading should be taken as a positive or bullish for the stock market, while a lower than expected reading should be taken as a negative or bearish for the stock market. Now, notice how the forecast is lower than the previous. So this is telling us that the day is also most likely going to be bearish, just from this. And not only is it telling us, but it's also telling Wall Street and all those other hedge fund companies and stuff. Most of the time they base and plan for this type of characteristic based on the forecast versus previous. And so not only that, but like I said, the quantitative tightening, which also goes into effect sometime Tuesday. This is basically making it a bearish day more bearish. And if you guys are new to this meeting, or maybe you missed last meetings and not sure what the quantitative tightening or easing is, I can explain it really quick. And so when the economy got shut down in 2020, the government shut everything down, most businesses except for essential businesses, during the second quarter of 2020. The stock market plunged. I mean, it was incredible, and we weren't sure if it was going to do an L-shaped recovery or a V-shaped recovery. However, the government started somewhere halfway, during that quarter, the government decided to start pumping the stock market while everybody was at home, nobody was working, businesses weren't making any revenue, and while the government was handing everyone thousands of dollars of stimulus money, the government was buying billions and billions of dollars worth of stocks. Now, this is called a quantitative easing. Now, when everything had plunged to just significantly low, I even watched a barrel of oil reach under $1. $1 a barrel of oil, and now it's over $80 right now. I watched it touch $125 when Russia invaded Ukraine, but so they basically bought oil for $1 and a whole lot of other stuff, and now they're selling it. So the effect that it had on the stock market then is that it created, the stock market would surge like crazy. I mean, we had a V-shaped recovery, and it was amazing. And so the neat thing with this quantitative easing and tightening is that there is a schedule. So it just doesn't happen, really without notice. I mean, it kind of does in a certain way, but we know when it's going to happen, and we just don't know what time it's going to happen on that day. And so back then, one of our members found the schedule, and I was able to really digest a lot of that information. And so when the government decided to start doing what's called quantitative tightening, that's when they're selling the stocks that they bought then, and so they're selling it now. And so that is creating the opposite effect. It is scheduled to have a massive drop in the stock market. I'll pull up what that looks like right here. This is the Federal Reserve Bank of New York. This is what the government absolutely loves. This bank, they use it for their accounts. And so this is the schedule. Now, the only important thing that you guys need to know about this list is the days and times, or not the time, because there's no time. The time is unexpected. Out of the last 2 weeks that they started doing this, we're trying to learn when are they activating, when are they executing these cells. And the first week they did it during the middle of the day, and so we just weren't sure if they were doing it during pre-market, after hours. So last week we noticed that they the first Tuesday they did it during pre-market. They did it during pre-market, and then last Thursday it was weird. There was no activity during pre-market, and then there was no major plunge during the market hours. But then all of a sudden, after hours on Thursday, in the middle, is when we saw that big sell-off. And so now we know that the government will sell these stocks at any time that day, whether it's pre-market, whether it's in the middle of the day, or after hours. So this is the date. So it's basically Tuesdays and Thursdays up until a certain point. Then it'll be more once a week, and then it'll be every couple weeks. Then it goes all the way to basically September. And these are dollar amounts. So this is basically $6 billion is scheduled to be sold this Tuesday. And then so on Thursdays, they have scheduled to sell about almost $4 billion worth of stocks. So this basically tells us kind of a severity level of volatility, or extra volatility, on top of everything else that's scheduled. And so if you guys need this link, I can easily post it for you guys in our chat room. That way you guys can have it. I've also posted screenshots of it, but it's good to probably take a look at it every once in a while, in case if the government decides to reschedule certain things here, or add, remove, or whatever. Same thing with the economic reports. These can change at any time. Plus, with any forecasts and things like that, there might not be anything, but then all of a sudden, there could be something new, or something changed. We've easily done these meetings, talked about these forecasts, and then for some reason the next morning somebody edited them, And so whether they be higher or lower, and all it is just manipulating things. So it's why it's important that we look at this stuff regularly, every day, not just the weekend. And so going into Wednesday, so again, Tuesday and Wednesday, these are the big, government meetings and stuff. Wednesdays is the big one, obviously. And so we don't see any pre-market economic reports. We have a 10 o'clock right here. So this is the existing home sales for the month of August. So this is scheduled to be released 30 minutes after the stock market opens. And the housing market, this is going to be probably the major key right here, because the existing homes, that's the used homes, and that holds the majority of the sales, versus new home sales is usually like a $500,000 or under that. And so we have, we're just under 5 million here. So that's the majority of the revenue. That's the majority of the reports. And so we're seeing month over month that these are declining. And so as more of these interest rate hikes go into effect, less and less people are going to be buying homes. So this is very, very bearish for the economy. And so this should be, if it basically, again, so the Wall Street investors focus on the forecast, and they will anticipate and play their strategies very bearishly. And it's interesting because sometimes the actual report comes back and it may meet or beat the forecast, and it still plunges. Only because it is probably still less than the previous. It's still showing a decline in economic growth and in the housing market. And so if it can meet or beat the previous report, then that we could have a possible U-turn where we could maybe see the bearish activity starts to turn bullish, but that's probably not really likely. Very, very unlikely. So the crude oil inventories, which gets reported 30 minutes after the existing home sales report. Crude oil inventories has been kind of strange lately because it has a kind of a yo-yo effect. It is a weekly report, so it's not going to have that big of an impact on the stock market that day. Investors are probably going to say, whatever, because there's more important stuff to focus on. After the existing home sales. Existing home sales is huge. Don't get me wrong, that like I said, that's a monthly report, but these other ones are going to have a big impact on the stock market during power hour. And normally we don't have that kind of stuff, through the economic stuff. It's always in the morning. So, but then we have on Thursday, we have the unemployment report. This, they call it the initial jobless claims report. This is going to be reported 1 hour before the stock market opens. Last week it dropped pretty significantly, very, very surprising. And but usually when it drops or surges, it usually bounces off of that. So we're anticipating that the unemployment report should bounce off of that low area, and so this is also bearish. This is bearish. So we got several bearish days, and then we have Friday right here with the Federal Jerome Powell to speak. Depends on what he says. It's kind of like a wild card, I guess. So, but this is going to be more towards a power hour. And we can always look ahead to the next following week. It will need more time to kind of populate some more information, but Monday could also be a recovery day for that following week. It just depends on the activity on Friday, but most likely Jerome Powell's going to say, we need to do more interest rate tightenings and stuff. Now, keep in mind, going to interest rates, let's just click on it. I'm going to show you guys something here. This is basically, if we go to the interest rate section, we can keep on clicking more, and we can see the history of the interest rate hikes, but also what's scheduled to come. And so we have 3 more interest rate hikes before the year's over, and we still have a full another year next year of interest rate hikes. But it will get to a certain point right before next summer of next year, where investors will begin to see the light at the end of the tunnel, and we are going to have a phenomenal bull season that'll last probably 9 months. But for now, we're entering a 9-month bear season, but it will be followed by a 9-month bull season, or bull market, I should say. And so, but for now, I would anticipate Jerome Powell will probably mention more interest rate hikes before the year's over, and that's just too aggressive. That is, less is more, Jerome. And so, but they're just trying to be aggressively lower inflation and lower the stock market, and it's all for financial gains. And so if they're doing it, if you can't beat them, join them. So we gotta. These are great opportunities that we all just have to take advantage of. And so, so this is the economic reports. And so the next part of our meeting here is we'll go over earnings. So the most anticipated scheduled earnings for this week is basically right here, which is going to be your Costco, AutoZone, FedEx, Accenture, General Mills, Aurora Cannabis, Darden Restaurants, Lennar, Apogee, and KB Homes. And so all my posts are basically saved in our featured announcements area, and these are kind of like our bookmarks. So that way, I can just bookmark stuff there for my future reference and for yours. And so I also post the top 10s analysis on here for our reference. That way we can kind of go over more technical information. And so the Costco, which is scheduled to release their earnings on Thursday after the stock market closes. However, the company's earning release has a 65% expecting an earnings beat, which is about average. Usually when we're looking at this, 65% is average. Anything above that should be considered above average. Anything lower than that is considered below average. And so, however, option traders are pricing in between a 4 and a 5% price movement after earnings in either direction. And so on AutoZone, they'll be releasing their earnings tomorrow morning, Monday morning, before the stock market opens. The company's earnings has a 60% expecting an earnings beat. Option traders are pricing in around a 5% price movement in either direction. FedEx, which we'll talk more about here, there's been some really unusual activity and some manipulation going with FedEx. FedEx just dropped last Friday, like 20% or something about how they released their earnings prematurely. Now, we've seen this before in the past. This is pure manipulation. What we see typically happen is they do this, they get it to drop 20%, and then at the earnings, somehow they just miraculously beat their EPS or revenue or something like that, and then they surge 20%, and they recover back to where they started. And so this could easily be that scenario. FedEx, you've been chosen. FedEx will be releasing their earnings Thursday after the stock market closes. The company's earning release has a 47% expecting an earnings beat. That's not good for FedEx. That's 50-50. But however, option traders are a little more aggressive with its price movement, anticipating around a 7% price movement in either direction, where normally it moves around 5% or maybe even less. So we're going to be really focusing on FedEx this week. Definitely keep that one on our watch list. Accenture has confirmed the release of their earnings report on Thursday morning before the stock market opens. The company's earnings release has around a 73% expecting an earnings beat. Definitely a little above average. Option traders are pricing in around a 5% price movement, definitely double compared to what it usually moves. General Mills, big company. General Mills is expected to release their earnings report on Wednesday morning before the stock market opens. The company's release has a 72% expecting an earnings beat, which is pretty good for General Mills. Normally it's around 67%. Option traders are pricing in around a 5.5% price movement in either direction, where normally it moves around 3%. Aurora Cannabis, definitely let's talk about that. Now, one thing that I like about posting these is adding the image to it. Because if you're not sure what the company is just by looking at the name of it, you can definitely, the picture basically can say 1,000 words. You can definitely get some clues on what the company is just by looking at the image. Now, however, Aurora is scheduled to release their earnings on Tuesday after the stock market closes. However, the company's earning release has a 40% expecting an earnings beat, which is pretty terrible. And the cannabis industry is hasn't been doing well for quite some time. However, option traders are pricing in around a 26% price movement in either direction, and most likely in a downwards direction. Out of all the earnings scheduled this week, Aurora Cannabis is scheduled to be the biggest mover in either direction. And this may be a good one for straddling, or it may not, because even a 26% price movement, ABC or Aurora Cannabis is a penny stock, and 26% still isn't really a big dollar amount movement. And so it may only move $1, so you may only gain maybe $100 per contract. But we'll just have to kind of take a closer look into this, because we're expecting a lot of volatility with Aurora, absolutely for sure. But I also want to talk a little bit about the cannabis while we're at it. A little bit of a history story here. Cannabis in Canada was legalized several years ago. I think about 3 years ago. What happened is that they decided to vote on it. Usually these voting events take place in the middle of the year. And they voted on it, and it passed. And they basically said, okay, the following year, the law will go in effect. So what happens is that everybody pumped cannabis stocks. They were penny stocks before. They were $3, $5 a share. Well, they were pumped up to $50, $100, and $150 right before it was actually legalized. So the next calendar year comes into effect, and then that's when all the laws get activated, and then cannabis was then legalized from coast to coast. And then you had all these farmers, all these stores and producers and whatnot. There was just too much. They flooded the market, and what was had a short supply, high demand, made it very valuable, now had a huge supply and a lot lower demand, and that created a plunge in that part of economics. And so these stores and farmers had to cheap sell, and so they're struggling to be profitable. And so the United States is going to have their turn next. And it's going to happen, it's inevitable it's going to happen. It's going to happen in either two ways. It will either vote on it like we normally do, but it doesn't always get agreed on, it doesn't always pass. But eventually it may pass, and we'll go through the same scenario where we'll be able to ride that wave until the next calendar year, and then it's going to plunge, and then we need to get out. These are not long-term investments. However, the second scenario that this could get legalized here in the United States is by having it done automatically. After there's like more than 20 states in the United States that have legalized recreational cannabis, then it will just automatically happen the next calendar year. And so we have to be aware of this, because it will be a huge financial gain and almost a once in a lifetime. Actually, it'll happen twice, with the Canada scenario and then with the United States. And so Mexico, they just, it's kind of weird. They just let's just do it without even voting or anything. And so the United States is sandwiched in between two countries with legalized recreational cannabis. So it's definitely going to happen. It's going to happen in one way or the other. And so Darden, with this image, you can obviously see that they're part of the chain restaurants. Most popular is with the Red Robin and Olive Garden. However, Darden restaurants are expected to release their earnings on Thursday morning before the stock market opens. The company's earning release has around a 33% expecting an earnings beat. I don't know if you've been to any of these restaurants lately, but there's just not that much business there. Option traders are pricing in around a 7% price movement in either direction, most likely the downwards direction, where normally Darden restaurants moves around 3 to 4% in either direction. Next one is the Lennar with the housing market. We were just seeing the economic report. Looks like it's going to be very, very bearish. Lennar is confirmed to release their earnings report on Wednesday after the stock market opens. And so when was the housing? Wednesday morning. So, I mean, we're just going to get a little trifecta going on there. The company's earnings release has a 37% expecting an earnings beat. Nobody's buying houses, nobody's refinancing. I mean, this is not good for the financial stocks or the housing market or housing stocks. And so, but like I said, bad news can be good, great news. All just depends on how we utilize this. Option traders are pricing in around a 7.5% price movement in either direction, where normally it moves almost around half of that. So it's going to be very volatile this week on a lot of things. Now, Apogee here is scheduled to release their earnings on Tuesday morning before the stock market opens. The company's earnings release has a 78% expecting an earnings beat, which is probably one of the highest percentages this week for the expecting an earnings beat. So that's pretty good odds, almost 80% there. Option traders are pricing in around an 8.7% price movement in either direction, where lately it's been moving around 7%. So there's something going on here. We need to take a closer look on it, definitely put it on our watch list and figure out why they are most likely going to beat their earnings. Next one is KB Homes. I think this is last but not least. KB Homes, another part of the housing industry, is expected to release their earnings report on Wednesday after the stock market closes. So, but they have a little better expecting an earnings beat than Lennar at 57%, which is not bad, but still, to me, that's almost 50-50. You know, they just option traders are still pricing in a lot of volatility on this one, around 9%. Normally it's been pretty volatile as well in the past, around 6%. Before that, he was in like around 3%. So these housing stocks are getting more and more volatile. And so, yeah, so this is, you know, just get ready. Save this from one of you guys that posted this. This is a great schedule that also kind of highlights some very important stocks for earnings, other activity, and some of the events that are taking place with the government. So, but this is also saved in our featured areas, so that way you guys can get access to it. You can save it that way, or print it out. You know, do whatever you want. That way you're looking at it. Friday, so looks like, yeah, with the Jerome Powell event that was scheduled on there, you know, so there's, like I said, there's a lot of activity on there, and that could easily scare a lot of the investors. So, you know, I would say I'm bearish on Friday. I'm bullish Monday, but the rest of the week I'm definitely bearish for sure. And so the other important part, when we do our due diligence, looking at this, trying to plan our week ahead, we always want to look at the article that investing.com posts every Sunday morning, called the top 5 things to watch in the market in the week ahead. So that way we don't try to miss anything. And so investors' attention will be squarely focused on the Federal Reserve in the past or in the week ahead, with policymakers widely expected to deliver a third straight 75 basis point rate hike on Wednesday. The Fed isn't the only game in town. Central bank policymakers in the United Kingdom, Switzerland, and Japan will also meet during the week as the global fight against inflation intensifies. Meanwhile, the United States stocks look set for another volatile week amid fears that higher interest rates will see the economy run into trouble. Here's what we need to know to start our week. First one is the Fed decision. The second one is the Bank of England. Somehow, yeah. So normally that stuff is all like on the bottom, so fifth. So this being on the second on this list must have a big impact on our stock market this week. So the Bank of England meets on Thursday after the last week's meeting was delayed by a week for Queen Elizabeth's funeral. Policymakers are expected to hike rates by another 50 basis points, which would bring the bank rate to 2.25 through a 75 basis point hike is still on the table. So it looks like their economy may also kind of bleed into ours. So number 3 is the global central banks. So yeah, so this is, it looks like it may be a financial collapse kind of coming up soon. A global financial collapse, and so not so much a collapse, but it's going to be a rough, bumpy road for them for the next, like I said, well, for them, it could be the next 15 months. I would anticipate we'll start seeing interest rate easing in beginning of 2024, because again we have all the rest of this year and next year of interest rate hikes. So 2024 should be the year they'll start easing the rate hikes. So number 5, U.S. equities. But yeah, just be sure to read this report when you guys get a chance. And then let's go to bar chart really quick. We use barchart.com a lot for options activity. So we'll click on options, most active options. What we're looking at is last Friday's overall options activity out of the entire system, and it's sorted out by options volume. Now just like any other volume is always today's buying and selling activity. And so Apple, Tesla, and Amazon always dominate the list. They're always the top 3, and because they're the most favorable stock option to day trade and to swing trade. They may not move a whole lot, but in the options world, these are huge gains and losses. And so, plus they're very easily predictable, especially when you're utilizing moving averages with your advanced charts and graphs. Now, it also shows what percentage are calls and what percentages are puts. That way we know kind of what's on, what's leaning more towards on what side. A lot of it seems to be kind of 50-50. So a lot of people are straddling possibly into going into Monday. And so if you're new to options, basically a call is to bet a stock goes up, a put is to bet against the stock betting it goes down. A straddling is utilizing both together at the same time. You're betting a stock goes up and down. And it may sound like it's conflicting. Why would somebody bet a stock goes up and down at the same time? Well, you can only lose what you have on one side, but on the other side, the gains are potentially unlimited. So in the worst case scenario, due to a lot of volatility, you may lose 100% on one side, but you may gain 200, 300, 500, or 1,000% on the other side. That'll wash out your loss on the other side. Now, typically we'll buy right before close. We'll buy 5-10 minutes before close. That way we'll sell them the next morning. And that is considered a swing trade, not a day trade. So when we're going into the next morning with our calls and puts, we can either sell them at the same time, or we can sell them at different times to try to maximize our gains on one end and minimize our losses on the other. And sometimes we can turn that loss into a gain. And so, but it's more risky doing it that way, because if you're not familiar with charts and graphs, you could easily, sell the wrong one and lose maybe your gains in the other. And so, but it's safer if you just wait maybe, within 1 hour after the market opens, and especially going into a day where there's a lot of scheduled volatility. And so, but when we're normally looking at this list, on a regular basis, we'll see stocks that are normally on here. Just like I said with Apple, Tesla, Amazon, We'll see some semiconductors as well as like Nvidia, AMD, and Facebook. But every once in a while, you'll notice some things that are on here that are not normally on here at all. And all of a sudden they are. And when you see that, we have to consider that as unusual activity, because they're not normally on there, and all of a sudden they are. There's a great reason why. For example, all of a sudden there's FedEx. FedEx is not normally on here at all. And now all of a sudden they are, and they're on the middle of the page. They're not too far down from the list, giving them a tremendous amount of options volume activity. Now with this options volume activity, they're nearly 50-50, so people could be straddling, because coming into Monday we could see a pretty good substantial gain. It could be another 5-10%, trying to recover somewhat before going into earnings. But like I said, normally, this is definitely manipulation at work with the news and or the rumors or whatever is going on. We see this all the time.
Manipulation 4.
Alexa here is going off. But we can also look at other things too, like NEO, with Chinese stocks and stuff. Or other events like with higher or lower calls or put ratios. Lucid is right here with a very, very high call percentage, the highest one out of the page, next to AMC. Now AMC is one of those manipulated stocks like GameStop. I don't really recommend participating in those, because a lot of those types of investors are too optimistic, and so a lot of them are at a significant loss, and all they're trying to do is to lower their average cost. And so you definitely do not want to participate in that. So stay and add that as part of one of your rules to avoid manipulated stocks in that sense. But if it's like long-term manipulated stocks, if it's something like a short-term manipulated stock like this, where it's in and out and over, or in and done, then that's a good short-term investment, as long as we're aware of what's going on. So everything else looks like it's pretty well 50-50. Lucid has the highest, and but yeah, everything else looks like it's 50-50. Now there's an ETF here. If you guys are in the ETFs, you can always take a look at that. These always seem to have higher volume activity, but you can see the percentage of the calls and puts are always way more out of whack than the stocks. So sometimes it may be hard to decipher, which one to kind of lean towards going into the next day. Now I've noticed after many years that the ETFs percentages seems to be focused more on that particular day, where the stocks can not only can focus on this particular day, but they also help provide information going into the next day. And so very, very valuable information. Now, to collect more details on these, we can click on the options volume leaders in the top, or the left area of the options menu. And this will provide us the most active individual calls and puts. That way we can see, that way we can continue to follow the money. And so when we're looking at it on a Friday or on a weekend, we'll see DTE. DTE is the number of days until that option expires. So if it's 0, then it's no longer valid. And so we need to avoid it. We need to ignore it because it's expired. So that means out of this entire list, this Apple put, which holds the highest volume, is the most active one so far. As open interest is 40,000, volume is 65,000. And if you're new to options, open interest is basically the total number of open contracts that have been traded but not yet liquidated via offsetting trades, meaning they've been previously bought and they're being held. They haven't been sold. So these are like people holding. And when we're seeing volume, again, the volume is today's buying and selling activity. When we see the volume that exceeds over the open interest in one day, that is a lot more buying activity that will begin to accumulate the next day into the open interest. So it's just showing more interest, more desirable. And so $135 put, that's not good for Apple. And this is set to expire in 35 days, sometime mid-October, October 21st. And so, people or investors are preparing that, especially for this week, is going to be very, very bearish. And so it looks like a lot of investors are prepping up for that. However, we do have some that have bought some calls, but with a much sooner expiration, $55 call. This could just be preparing for tomorrow, for Monday. They bought it. They're probably going to sell it sometime Monday and secure their gains. You can easily see that the open interest was just under 18,000, and now it has the volume of 56,000. So that is a lot, because they're preparing for a recovery day on Monday. Versus the other one, that's holding the majority. That's probably their weekly hold, because who knows? Apple could reach $135 in a week or two. Just depends on how volatile this week goes. So the third one is the Tesla. We have a Tesla call right at the money at $300 that expires this Friday the 23rd. Had an open interest of only 11,000. Now we have 44,000 in volume. So same thing for the Apple call. They're just prepping for Monday being a good green day, and which is good. And so and the next one is an Apple call. This one, same strike price as the top one there, that expires in 35 days, $170. Wow. So the difference between a straddle and a strangle, they both have the same concept where you're betting one goes up, one goes down. The straddle is basically at the same strike price, so your call and put are the same strike price. The strangle are different strike prices. One is higher and one is lower. And that's basically what we're kind of seeing here, where, however, the put is more in favor because we have 65,000 in volume on the put, where 40,000 on the call. Now, usually we'll recommend going 50-50, but you can, be a little heavier on one side over the other. If you're more certain that the market's going to go down, you can easily do 60 or maybe up to 70% heavier on one side, while going 30 or 40% on the other side. But you definitely want to try to, keep a good, fair blend of the two. And always have a rule: never have a call without having a put, never have a put without having a call. That's gotta be a rule every day. Apple, there's another one right here. We have several more Apples here. As you can see, Apple's very popular, but yeah, so this is very, very important. But if you're more of a longer term holder, maybe you don't have a whole lot of time to actively trade throughout the day, no problem. There's a way to kind of see some highly valuable information for that. Now, volume is great to see more sooner activity, that expires within a week or a month. But if you're looking for things that are a lot longer, you want to refresh the whole page under the open interest rather than volume. So click on open interest. It'll sort it out just from what we see on this page, but we have to refresh the entire page. So we refresh the browser, and now it'll refresh the entire system. And now look, we have a huge amount of open interest, 188,000. These are people holding on to these, you guys. And so, and these dates are significantly much further into the future. 126 days, there's 273 days, there's a 490 day and a 854 day contract. So starting with the top 3, 4, 5 has a lot of open interest. So we'll start with Nokia. Nokia was one of the number one cell phone companies in the 90s and early 2000s. And but we have a $5 call strike price for some reason. What's going on with Nokia? Are they getting back in the cell phone business, or what? Maybe are they like BlackBerry, where they're just focusing more on some kind of software, like especially security software? The volume is slowly accumulating either upwards or downwards. It's always hard to tell because volume is the current day's buying and selling activity. But so far we need to focus on the open interest because that's where it's showing the interest. But $5 call strike price expires in January. Then we have Ford Motor Company. There's going to be several Ford Motor Companies here. We have a $20 call, we have a $16 put, we have a $12 put, and then we have several other puts. So we definitely have a lot of puts on here, but it seems like the majority of the interest is focusing on Ford Motor Company. These puts, maybe they're selling it or not. I mean, maybe they're selling the call and buying the puts. It's hard to say, but Ford Motor Company reached $25 a share right before Russia invaded Ukraine. If Ford Motor Company can reach $25, it can easily get to $20 again. And so if you can utilize this information for even buying shares, so that way, because it's telling you that there's investors that believe and they're betting that it's going to reach a certain number in a certain time. So if you buy like Ford Motor Company under $15 a share and it reaches $20, especially by January, you just gain 33%. And maybe they're still paying dividends. So not only are you holding on to something that's appreciating, but they're going to pay you every 3 months just for holding on to their stock. Then we have PBR. I can't remember what PBR is, but we have a put that expires next month. Then we have American Airlines. American Airlines looks terrible just by looking at this. We have a $12 put right here. We have a $10 put right here. And look at this, a $5 put for American Airlines that expires in the beginning of 2025. So there's something terribly going wrong with that company, as well as probably the airline industry. Maybe the shortage on pilots, maybe the planes are deteriorating and need to be replaced. I mean, there's something, that's coming soon. GameStop. We have a GameStop, another one of those long-term manipulated stocks I highly recommend to avoid. Has a pretty crazy strike price, and so, but it definitely holds a huge amount of open interest. And then Twitter is going to be a lot on the news coming soon because Elon Musk and Twitter have their court dates in October, sometime after Elon Musk's Tesla artificial intelligence and robot reveal date that's coming at the end of this month. And so Tesla, even though there's a lot of bearish characteristics that's scheduled to happen, there's going to be a few stocks that are going to be flying under the radar. And Tesla could easily be one of them because of that event that's scheduled to happen. Are you guys aware of this artificial intelligence day? This is the second event that's scheduled to happen, and so they're going to reveal this robot. This is like something out of a movies. It can move. It has specs. It can do things around the house. Here are some specs right here. See if I can pull it up here. Eliminates dangerous, repetitive, boring tasks. It'll do your laundry or dishes. I mean, who knows? I mean, this is just the first generation. It's going to improve. So here's some of the specs to know before it happens. It's going to be 5 feet 8 inches tall. It'll be able to carry 45 pounds. Its weight is going to be 125 pounds. Deadlift is about 150 pounds. Speed, it'll be able to walk up to 5 miles an hour, and arm extend lift is about 10 pounds. And it'll only get better from there. And so Elon Musk, if you guys watched his reveals and with the cars and stuff, typically what he does, he goes over it. It's all unscripted and everything, and and he just talks about it, features, advantages, benefits, and stuff. But at the end, he'll say, now you can go to Tesla.com and reserve this for however much. It could be $500, could be, most likely it'll probably be $100, because everybody has at least $100 that they can put down towards this. And then on the financial earnings and other events, they'll be able to say, oh, we had record-breaking orders and whatnot, or just huge orders, and but this is a new thing. This is a new industry, nobody else is really doing it. Yeah, I mean, I think Honda's made some robots and other people, but not with legs and arms and stuff that can walk around the house and lift things. And so this is a whole new thing that's just right out of the movies, but it's coming to reality. And so if they're the only ones in the markets, it's going to really, people are going to pump up the Tesla stock. It's flying underneath the radar. And it's already been doing that. Tesla right now is already at $303, and it's just going to keep going up. But once they reveal it, though, just like anything else, buy on rumor, sell on news. Once they reveal it, most likely the stock's going to plunge and kind of cool down a little bit. And so, but yeah, so just know this is coming up here in just a couple weeks. Let's see. Okay, so there's another website that is very, very important to be aware of, and that's the Biden schedule. Now you can just go to Google, just type in Biden schedule, and then you have the President Joe Biden schedule right here. This information gets populated about midnight on Eastern time or 9 p.m. on Pacific time. For the next following day. And so this really helps provide, just like the economic reports, it can help provide a massive amount of volatility. And we have to know what's going to happen before it happens. We just do. And so, like, for example, let's take a look at, what was it? See what days. Well, so just going previous week, you can see a lot. So the greenish blue bar right there, that's the press conferences usually. But then we'll have like Biden delivers remarks on electric vehicles. So this was on Wednesday. So we knew that this was this was updated on right before Wednesday. We knew that that President Biden was going to start talking about electric vehicle, the electric vehicle boom for America, and sometimes we think of parts and stuff like semiconductors. You guys were thinking of investing in AMD. I just went straight to Tesla. I was like, no, we got to do that. But also other things that's also important to look into is the charging stations. The government is going to contribute a massive amount of money on an infrastructure system that'll be where they're going to be buying a lot of charging stations. So the charge point seems to be getting the most activity, most unusual activity when it comes to investing into that part of the infrastructure. But again, other stocks that would do well on something like this would be like Lucid or Rivian. But Tesla did very, very well that day. So we can always know what is going to happen before it happens, just by looking into these scheduled dates and times. And so, but it's critical. These are all just really critical resources. That's a must. These are essentials. You cannot be trading without using these. And so, so hopefully this all makes sense. Anybody have any questions? Anybody want to bring anything to the table? Everything makes sense? Feel free to unmute, or you can chat in our chat room messengers. Assuming everything makes sense. Nobody has anything? Well, I think I have everything here. So if you guys have any questions, you can feel free to message me on Messenger. But But let's definitely rock and roll this week, you guys. Let's make a lot of money. Definitely stay safe out there. Make good choices. If you ever have any questions, please don't hesitate to let me know. Thank you, guys.